Gamuda has bagged a 1.96 billion ringgit construction contract from Pengurusan Air Selangor as the main contractor for the Sg Rasau water treatment plant in Selangor. In a BOS filing, Gamuda said it had received a letter of acceptance for Package 1, design and build of proposed Rasau intake, raw water pumping mains, water treatment plant and associated works. The site possession of this 35.5-month project will be starting on July 15, 2022, with the aim to complete it by June 2025. The Rasau water treatment plant contract brings Gamuda's total construction order book, which was already at an all-time high of 12.4 billion to 14.4 billion ringgit. In a statement, the group said the development of this water supply scheme is crucial and that with its implementation, the water reserve margin is expected to increase to 20.9% by end June 2025. Without it, the current water supply reserve margin in Klang will drop to 1.9% by 2024. Gamuda claims it has a proven track record in designing and constructing dam and water treatment plants locally, with the completion of the Sungai Selangor Water Supply Scheme Phase 3 in the year 2000. Digital Nasional's 70% stake sale offered to local telecommunications companies is expected to be completed in 2 months, according to its CEO, Ralph Marshall. He explains that it is still going through the process and being finalised, with the 6 mobile network operators having signed both the reference access offer and have also signed off on the term sheets. This will then lead to the shareholders' agreement and the subsequent completion of the shareholders' arrangement, which is expected to take another 2 months. Marshall was speaking to reporters after a special briefing on the national 5G rollout that was held today. The briefing was attended by officials of the Ministry of Finance, the Ministry of Communications and Multimedia, and the Malaysia Communications and Multimedia Commission. Marshall goes on to say that not many countries in the world would have taken it as far as Malaysia has, with both ministries fighting seriously about their objective, namely to reduce competition of the infrastructure and promote competition at the services level. To recap, on Thursday, Communications and Multimedia Minister Tan Sri Anwar Musa said 6 local telcos had agreed to take up stakes in DNB ahead of the June 30th deadline, with the 70% shareholding spread among them. Marshall also said there are also provisions made for arrangements to be done in the event of a merger among the 6 telcos. He explains that the MNOs are allowed to buy 12% and that if 2 of them decide to merge, they will have 23 to 24%, adding that there is a limit to how far the telcos' shareholdings can go. Marshall also updated that DNB's 5G rollout had reached 25% and is on track to meet the 40% target by end 2022. The government has provided a total subsidy of 11.7 billion through 16 cycles under the imbalance cost pass-through mechanism since 2015, says Tenaga Nasional. In a statement, the national power provider says the subsidy has allowed TNB to remain neutral from the variations in fuel prices. TNB says the recent hike of the fuel prices has resulted in it carrying higher than usual receivables balances, which it says it is managing closely. Previously, the Edge Malaysia Weekly reported that TNB's registered receivables more than doubled year-on-year to a record high of 14.07 billion in the first quarter from 6.29 billion ringgit. An estimated 8.8 billion, or more than 60%, comprises additional fuel costs not accounted for under current electricity-based tariffs and ICPT surcharge for February to June this year. ICPT acts as a buffer against fuel price swings to avoid shocking the market with a sudden jump in electricity tariff. In its statement, TNB expressed its confidence in the government's commitment to the ICPT mechanism and the full recovery of additional generation costs. The utility notes that the Energy Commission has announced that the 2 cent per kilowatt-hour rebate for domestic users and 3.7 cent per kilowatt-hour surcharge for industrial and commercial users remain in place for the July to December period. The government has agreed to fund the rebate and surcharge totaling 5.8 billion ringgit. Airasia X says is in the midst of regularising its financial position via proposed debt and corporate restructuring and fundraising after slipping into PN17 last year. Thereafter, it will implement a revised turnaround plan. It has about 4 months to submit the regularisation plan to the relevant authorities for approval. AX adds that it will make the necessary announcement in relation to any material development accordingly. The airline slipped into PN17 status in October 2021 after its external external auditor, Messrs Ernst & Young, expressed a disclaimer of opinions in its audited financial statements for the 18th month financial period ended June 30th, 2021. So far, the debt restructuring proposal has been approved by its creditors in November 2021 and by the High Court of Malaya in December 2021, which allowed AAX to write 33 billion of liabilities and provisions for liabilities back to profits. This allowed the airline to return to the black for the third quarter of FY22, registering a net profit of 33.62 million ringgit. AAX also intends to raise funds of between 150 and 500 million to shore up its balance sheet. In February, it had proposed a 1-for-1 rights issue and special issue to raise a total of 166 million, only to reveal in May that it was still looking to secure an underwriter. Dagang Exchange, via its 90% owned unit, Ping Petroleum UK, has taken delivery of the Savann Hummingbird floating production storage and offloading vessel from Marine Energy Transportation Company TK Corp. DNX said the acquisition of the FPSO is a critical milestone in the Central North Sea Avalon development project in the UK, which the group continues to progress after receiving a letter of no objections from the North Sea Transition Authority. Ping has also been granted a 19-month extension by NSTA to the second term of the P2006 license containing Avalon, which allows the company the additional time to optimize and gain full regulatory approval of the Avalon Field Development Plan. The proposed development concept includes plans to deploy the Savann Hummingbird FPSO at the Avalon Field, which will be modified to facilitate the electrification from an external low-carbon source. This will allow Ping to expand and diversify its portfolio of producing assets in full compliance with the UK's energy security and net zero targets. Group MD Tan Sri Said Zainal Abidin Said Muhammad Tahir says the group anticipates full operational deployment of the facility on Avalon by 2025. With a total estimated ultimate recovery of 23 million barrels of oil reserves over a period of 12 years, oil production from Ping's second oilfield asset is expected to come on stream in 2025.